Good day, traders and investors. My name is Roger Scott, and today is Thursday. It's August 12th, and the market's going to be opening up in about an hour and 15 minutes or so. As you can see here, there's not much activity pre-open. We always start off with the futures to see what the market's doing pre-open because we want to see the impact of Asia and Europe on the U.S. market. Remember, the market works 24/7. So anything below, whenever you look at the Dow futures, if you see less than 85, if it's a positive or negative, that means it's random. And that means you shouldn't make too much out of the market, and you shouldn't expect the opening to be really, really crazy high or low. It means the markets are just random, and that's okay. A lot of the times the markets open up random. That means you shouldn't be thinking about doing anything really crazy in the opening. Now, in terms of global economy, and I'll kind of go back and forth between this and the Fed data because we've got two Fed data to report today. And, I guess I'll start here. First report we're going to have today in about an hour and 15 minutes or so. Actually, the market's going to open up in about an hour and 45 minutes. I'm sorry, I'm losing my mind. It's still, or let's see here, an hour, see, 8:45. Anyway, it's going to open up at 9:30 and it's only 7:44 right now. So we've got some time. But these reports come out at 8:30, so I was confusing the time the reports come out and the time the market opens. The bottom line is they're coming out in about 45 minutes, and then the market opens up an hour after that. So we still have some time. The expectation now for jobless claims is below 400,000. The 4-week moving average has been right around 400,000, 410, 390. The truth of the matter is, if the number is slightly below 400,000 or even at 400,000, it'll be good. It'll be fine. It's not going to be that bad. It would be great if the number could be like 350, 360. But the truth of the matter is anything below slightly less than 400,000 is kosher. Then we've got Producers Price Index, and the number Wall Street is looking for on an annual basis is 7.3% and a month over month at 0.6%. Last month was a 1% increase, which was a little bit much. So we're looking for slightly less, and we're looking for a year over year at 7.3%. It'll be interesting to see if we get that number, and I guess now I'll back into the report that talks about it as well. And I'm only highlighting the most important things for you to pay attention to. Worries continue in China. Regulation crackdown. Now they're talking about online insurance industry in China. That'll be very interesting. That's not a really big sector in the U.S. stocks. I mean, Chinese tech stocks are really big. Insurance industry, not so big. Don't think that's going to have as big of an impact on U.S. as like Alibaba. You know what I'm saying? COVID. That's the wild card right now. COVID infection cases are surging in Japan. Talk about timing, right? Where a state of emergency has been in place even as the nation hosted the Olympics. Can't make this up if you tried. And plans to do the same for the Paralympics. Man, they just have this need for Olympics during a peak in COVID cases. I mean, don't ask. New cases are reaching record highs in Tokyo and other regions. Medical officials say hospital facilities are getting stretched thin. And I don't know about you, but that sounds a lot like a year and a half ago, February, March. If they start closing airports around the world, that's when you know it's getting really bad. Investors' concern about inflation and uncertainty about the U.S. Federal Reserve future plans to ease up on its support of low interest rates has been hanging over the markets. That's where these two reports come in. Most of the rise in consumer prices, we've seen heavy inflation, folks. We've seen a lot of inflation. It's been tied to very specific goods. Used cars, man, I just sold my Jeep for $4,000 more than it's worth. I'm not kidding. Building materials. Who's been talking about building materials for the last 4 months here? Gee, I wonder what his name is. And hotel rooms. These items are in short supply, and as the increase in economic activity goes forward, they will tend to, move back and forth. Federal Reserve has repeatedly said that it believes the increase in inflation is temporary. Yeah, I'm holding my breath. Investors will get another snapshot today when the Labor Department reduces the Producers Price Index, which is what I'm talking about, and we'll see how much there's been an increase in producers' prices over the last month and year. And yesterday we saw Consumer Price Index before the opening bell. So today you'll see it on a producer's level, and yesterday was on a consumer level, and the number was fairly much in line with estimates. So there was nothing really out of whack there. Looking at individual stocks, as you could see here, I want to show you this because this is really important. We're still fragmented, folks. We're going to need to calm down. We're going to need to cool off. As long as technology and consumer discretionary are not next to each other, that means markets are fragmented. And when markets are fragmented, they need to pull back. I mean, look at this. Look at these momentum levels on the Nasdaq. Let me show you this. Look at this. Just made all-time high a few days ago. Mid caps are flat, and I mean flat. Look at that, flat. So you got to be really, really careful. This is not a time to trade breakouts. You want to trade pullbacks when markets are really, really choppy. And on that note, I've got 3 for you. That's right, 3. First one, health peak properties, REITs. As a matter of fact, real estate. You see real estate, financial, and telecommunication, the top 3 sectors right here. Don't go to consumer discretionary. Don't do it. Stay away from it. Health peak properties. RSI, not overbought, not even close to being overbought. I like it approaching the 50-day moving average from a swing high. Let's look at what they do. Real estate investment trust. Imagine that. Life science, senior housing, medical offices. That's where you want to be right now. With the economy opening back up and the record number of seniors, housing, seniors, economy, think about it right now. This is where you want to be. There's so many seniors out, folks, and it's only getting worse and worse and worse. And with real estate housing prices, older people are selling their homes and moving into old age retirement communities. And that's where this really, really does well. Next one, American homes for rent. Folks, real estate's getting really expensive. Managing real estate investment trusts, focusing, acquiring, renovating, leasing, operating single-family rental properties, 44%. Folks, do you know how expensive? In Austin, home prices are 100. They're going for 100,000 to 300,000 over asking prices. Rental, leasing, apartments. Think about it. And last but not least, Cognex. Now, I said no heavy tech stocks. I did. Check out what this property does. Testing equipment, machine vision systems. Folks, that is the future. Machine vision industry shipped more than 200 vision systems, representing nearly 1.5 billion in cumulative value. Vision systems, vision machines for inspecting surfaces of product manufacturing. Remember, infrastructure. This isn't test. This isn't tech. This is infrastructure. Metals, papers, plastic. It's for manufacturing. Vision manufacturing. We're taking things to the next level, folks. Pulling back. Cognex. I really like this stock quite a bit, and it's not a large cap stock. Pulling back to the 50-day line. Expect to pull back probably to the 88, 90 level. I got Peak, AMH, and CGNX. Folks, you don't want to miss these stocks. And remember, the market is choppy right now. When markets are trending, breakouts are okay. When markets are choppy, pullbacks, and more pullbacks. And before I let you go, I've got something really, really important for you. Something you've got to pay attention to. While he's helped thousands of people with his recommendations, I mean thousands, there are some traders that Future of Wealth head trader 𝗧𝗶𝗺𝗲 members can't get in on. That's right. And he feels guilty about it. Lance is a good guy. He wants to help everyone. And with the markets choppy, he really wants to help you. He needs to help you. But the reality is that price action is volatile. Sometimes things move too fast. He began wondering if there might be a way to fix that and get traders in on his moves even faster. And he came up with Daily Profit Challenge. I got to get in on this Daily Profit Challenge. Let me be the first to say, these 60-minute trading sessions are amazing. He's already proven it's possible to spot price action like 30% in 5 minutes, even 3,000% in just 5 hours. Great Caesar's Ghost, 3,000% in 5 hours. I got to get in on this. Folks, there's only one thing left to do. Click the link below to see how Lance's strategy can help everyday traders like you gain a crazy advantage in the markets. And folks, click on the link below, like this video, subscribe to this channel, Stay ahead of the market by being the first to be notified when I post my next video. Don't you want to get 3 hot stocks like this? Of course you do. And have a great Thursday. Remember, according to people I know, it's Friday Eve. Get excited. Bye, guys. And tomorrow I've got some really good stocks and maybe a couple of shorts for you as well. Bye, everyone.